Welcome back. Now, South Africa's retail sector has experienced an uptick in sales, reporting a year-on-year increase of 5.6% in July. This figure marks a notable acceleration from the modest 1.6% uptick witnessed in June, according to Stats SA. Now, senior economist at FNB, Siphamandla Mkhwanazi, joins us for greater perspective on the print. Siphamandla, thanks so much for your time this year. So strong numbers coming out of the retail sector, as mentioned, up over 5% and starting Q3 on a high. What does this suggest about the state of households in South Africa? I guess the state of household spending, that is, considering that we did see a slowdown the month before.
Yeah, no, thank you for having me on your show. Now, this almost came out of nowhere. The market did expect that we were going to see some sort of an acceleration of around 2.7%. Now, this is more than 2 times what the market had anticipated. Now, what this is showing, interestingly, is that your more non-essential spending, so your clothing, your furniture, your hardware stores did so much better than your specialized food retailers, for example. Now, what this means is that there is a potential shift, considering what food inflation, particularly meat inflation, is doing at the moment. There potentially is a shift by consumers from these specialized food stores that specialize on food to more towards your general dealers, where you buy almost everything and they are searching for bulk purchases. So in a way, it does depict some pressure, particularly on lower income consumers, where we know that inflation has a much bigger impact. But it's at the same time, it's reflecting strengthening in balance sheet. If you look at spending on hardware, so these are people who are extending their homes, who are who are renovating their homes. So it's a balanced view, really. No one cannot tell exactly what is happening here. So it's moving in both directions.
And I mean, it's really interesting to see what consumers are spending their money on, right? You'd expect them to be spending more on necessities and not necessarily clothing and, I guess, tools and items we'd use to renovate our homes. And just on that, I want to speak about what many call the resilience of, South African shoppers. How much of this is on the back of, I guess, lower inflation, as well as those rate cuts that have come through? I mean, we are in the month of September, marking 12 months, right, from that first rate cut we got last year. How much of the resilience is on that, and how much of it is on, let's say, the back of promotional activity? I mean, you go through many of these big clothing retailers' trading updates, and they note that promotional activity has weighed on margins.
Exactly. So it reflects both those things. There are segments of the consumer that are reflecting that weakness, that are only going to engage when you offer them some sort of a special, and I think it shows in this data. And again, it also shows that we are in this asset, this acceleration in asset prices in South Africa. You look at the JSE, is performing relatively well. You look at the housing market as well, which we normally term as the biggest asset that a household would ever own. That is also showing an upturn. So there's this general feeling of wealthiness amongst South African consumers, particularly in the higher end of the market. And I think that reflects on the type of spending you talk about, spending on tools, spending on extending their houses. I think so that aspect of property price cycle, or rather asset price cycle, is reflected on those types of spending. But we've also had 12 months, as you correctly point out, of interest rate cuts. So that is more rent in the pockets of consumers. Inflation has been relatively low as well. I know food is particularly a problem at the moment, but on an overall, at an average level, there are more rand in the pockets of consumers, and the Reserve Bank normally speaks of 12 to 18 months before the impact of interest rate changes has an impact on consumer activity. So we might just be experiencing, or rather witnessing, the full impact, or rather that impact starting to filter through into the activity of consumers. But we also have seen that you publicly announced wage deals, particularly in the public sector. Your 3-year deals that are they're more above in inflation. In certain segments, they are back pays all the way up to July. So that would also have had some impact. Particularly, others would engage in spending in anticipation of that, and others would wait until that hits into their bank accounts. So that tells us that we may just see something similar, maybe not to the same extent, but something similar in September, especially as these interest rate cuts, all of these interest rate cuts that followed after the first one filter through into the system.
And that brings me to my next question, whether you think this momentum will continue into the latter half of the third quarter, as well as into the fourth quarter. I mean, fourth quarter, we know there's usually Black Friday as well as the festive season coming through that will spur shopping activity. And I mean, now that it seems like more consumers have more rands in their pockets, do you think they'll be, filling up their baskets a bit more? It also just speaks on consumer confidence. I know we haven't gotten the third quarter print, but you look at what's been playing out in Q2, where consumers are still pessimistic, but we are starting to see some sort of improvement.
Exactly. So as much as this came almost out of nowhere, we did anticipate we were going to see some sort of pickup, considering lower inflation, lower interest rate, improving household balance sheets. So we do expect that we probably are going to see a continuation of this momentum all the way into the fourth quarter of this year. And we know that South African consumers psychologically, when we get to somewhere in October, they tend to step back a little bit in anticipation of those specials in November. So a continuation in momentum, but maybe not at the strength that we saw in July.
All right, and before I let you go, let's chat monetary policy for a bit, right? We are still seeing that resilience coming through, but households do need that extra support. We saw the inflation print today decelerating to 3.3% and closer to where the SARB is anchoring inflation, which is 3%. What do you expect the SARB to do tomorrow? And also, what do you expect the SARB to do in November, considering that we are seeing a dovish tilt from the Fed?
Yeah, so before the inflation print at 10 o'clock today, I would have given you a much more confident view of what the SARB is going to do. But that result, that 3.3 against what the market anticipated it to be around about 3.5, suggests that inflationary pressures are maybe not as strong as many of us, many analysts anticipated them to be. Now the SARB has almost taken this dovish outlook in that they now prefer inflation to get closer to around 3% rather than the 4.5%. And considering what the governor has been saying over the last decade, that higher inflation begets higher interest rates, we now are seeing inflation printing below expectations, and it's closer to what they now prefer, around 3%. So that tells us that it's almost a flip side of what he's been saying for over the last decade, that now it is lower inflation begets lower interest rates. But I don't think that at the moment, given the fact that we are on this rising trend in inflation towards the end of this year, that we are going to see another cut, but the risk to that outlook is indeed towards the downside.
So the door for interest rate cuts from the SARB is ajar. Not fully closed, not fully opened.
It's not fully closed, it's not fully open, it's there.
Siphamandla, thanks so much for your time and just unpacking that print for us. That was Siphamandla Mkhwanazi, Senior Economist at FNB.